With housing affordability at record lows and supply struggling to keep up, how did Australia's housing market reach this crisis point? And more importantly, how do we fix it? I'm Tim Graham, and the Property Playbook starts now. Australia's housing crisis is pushing home ownership out of reach for many. With rising prices, tight rental markets and supply falling behind demand, today we're here to ask the big questions. How did we get here and what needs to change to fix it? Joining me for this discussion today is Michael Sukkar, Shadow Housing Minister, Kelly Ryan, CEO of the Real Estate Institute of Victoria, and Terry Ryder, Australia's independent real estate analyst from Hotspotting. Thank you all for joining us.
Thank you.
So Michael, I might start with you. The government has introduced various policies to improve housing affordability, yet property prices and rents continue to rise. What do you believe are the key drivers of the current housing crisis, and why have past efforts struggled to keep up with lasting change?
Well, I think it's a very complicated answer, but in essence, our capacity to build homes cannot meet up with the demand. Now, there's a couple of factors there. Huge constraints from state and local governments on housing, on new housing projects. The time it takes to make them happen is far too long, if they can happen at all. Secondly, we've had an immigration program that has not been calibrated with our capacity to build new homes. So in the last 2 years, for example, the Albanese government's brought in more than 500,000 migrants at a time when we're building fewer homes. So I think in the end, population growth, driven primarily by immigration, needs to be calibrated to the capacity to build homes. That, I think, ultimately is the only way that we force real reform into planning and zoning to make sure that those bottlenecks around supply aren't there. And marrying the amount of demand to the supply is going to be the greatest. But the truth is, we've got an accumulated deficit. So, Australia really probably needs to build more homes than we need for at least a 10 or 15 year period just to catch up with the accumulated deficit we've got.
Yeah. So with the most recent figures I saw, we had the target to build 1.2 million homes, and at this point we're going to fall somewhere in the vicinity of 250,000 short of that target? I
think that's a generous estimate. I think the Master Builders Association are estimating 350,000 short. Yeah. I'd say about 400,000 short. And if you put that into context, when I was Housing Minister, we built about 1 million homes over a 5-year period. This government's looking at building at about 800 over a 5-year period again, with record levels of migration. So things are getting a lot worse, and we're not seeing any ability to improve that supply lever. And part of it is obviously planning and zoning, but also it's very hard to make any project stack up at the moment.
Yeah, that's right.
By the time you factor in elevated construction costs, holding costs, regulatory charges, taxes, and we're in the state of Victoria, a government that knows all about taxing property. Once you add all those costs together, it's not economic to even stack up a project, even where you do have an approval.
Yeah, that's right. And of course, we've still got a COVID hangover with the cost of construction and things like that going through the roof.
Well, prices never go down.
No.
So the best you can hope for in construction, whether it's labour, whether it's materials, is that they plateau off.
Yeah.
But we saw, a 50, 60% increase over COVID. It never goes backwards. The best we can hope for is that it plateaus, and that I think has led to a legacy now of projects that are just not economic.
Yeah. Well, I'm keen to hear some solutions from you shortly, but we might take a question over to Kelly. So Kelly, obviously Real Estate Institute, you're at the forefront of this. What are you seeing on the ground with your agents?
What we're seeing at the moment is across Australia more broadly is there's multiple economies running at play here. So we're seeing some incredible capital growth happening in Queensland, which is actually now starting to price people out. We're seeing declines and stagnation in Victoria. So people's borrowing capacity has very much diminished. So people are having to make different choices if they want to come into home ownership around location, size, all their relevant specifications have drastically changed over the last couple of years. In Victoria specifically, given this is the market that we're most attuned to, we're seeing a lot of supply at the moment. So the back end of last year, we had record supply from a selling point of view, and that was the number of investors vacating the Victorian market. So good buying opportunities in Victoria and Melbourne in particular. It's just too good a market for it to stay stagnant for long. So we'd always say it's a great buying opportunity, and always buy according to your personal circumstance too. I think people that sit there trying to time the market are always going to miss in some way, shape or form. So good opportunities for first time buyers, good opportunities for upsizers and downsizers, though we still think there is more the government can do to actually help enable more transition and more use of our current supply. From a rental point of view, it is tough, and I feel for this group probably more than ever, in the sense that we have more regulation than ever before in the state of Victoria. More is being debated in Parliament at the moment and will be legislated in the coming month. These add costs to people holding investment properties, and we are an economy nationwide that is 100% reliant on private investors with providing the appropriate amount of rental supply. So when we're seeing so many exit the market, it's therefore going to create downward pressure on supply, which will absolutely increase prices. And those that hang in have a higher cost to actually comply with the regulations. So that will also drive an increase in rental prices, but also again what people will be able to afford. And people again will have to go, I would love a 2-bedroom, but I can only take a 1. I'd love to live in this particular suburb, but I'm going to have to move further out. So people are having to make some pretty big lifestyle compromises just to be able to find a housing solution that suits them at this moment.
Yeah, on the rental front, are you seeing changes in the demographic of people?
Yeah, we are. We're seeing actually now more people living in groups than ever before. So during COVID, people tended to want more space. So we saw, household sizes diminish. Now we're seeing people jam into 2 bedrooms and 3 bedrooms with more people in those spaces to be able to combat the cost of renting. And it's going to be a lifestyle shift for this country going forward. So we can't ignore and how we need to get ahead of renting becoming more normalised and more structured, and more opportunities in the rental space is something we've really got to get our heads around in this country pretty quick.
Very good. I've got some questions for you about why people might be leaving the state of Victoria, but we'll leave that for a bit later on. Terry, you've been looking at real estate markets for over 40 years. How did we get here? What are the things that have led to as to where we are today?
Yeah, well, Tim, I think there's 3 separate issues. Firstly, we aren't building enough new homes. Secondly, we have a chronic shortage of rental properties. A lot of people think it's the same issue, but really it's a separate issue with separate causes and solutions. And the third one, for me, it's the biggest one of all. We have an obscenely, ridiculously high cost of building new dwellings in this country, to the point where developers just aren't building projects for which they have approval because they just don't stack up. And that's an outrageous situation to be in at a time when we have a shortage of property. Look, we've got here 3 years of bad government, particularly at a state government level. We have over-regulation. We have all levels of government to a certain degree treating the housing industry as a cash cow, particularly state governments, and that doesn't help. We have there were a couple of statistics that were published in the last week, which I thought were quite staggering, and I was amazed at how little commentary there was in media about them. One came from the Australian Bureau of Statistics, talking about what is now the average cost of building a new house in Australia, which is $537,000. The other statistic came from the HIA CoreLogic Residential Land Report. The median lot price in our capital cities now is $408,000. You add those 2 figures together, we're getting scarily close to the point where a typical house and land package in a city in Australia costs $1 million. How the hell did we get here? Well, it's
that's the affordability issue right there, isn't it?
Well, that's right. To me, that is the affordability issue in one sentence. It underpins all the other aspects. It underpins the value of existing homes when replicating them costs so much, and that's the Productivity Commission report that was published recently had a lot to say about this, and the blame was spread across a number of different factors, but the biggest one was regulation by local government and state governments, red tape, how it adds to costs. We've got state governments constantly tinkering with the design of houses to make houses more beautiful, to make them safer, to make them more energy efficient, to make them more accessible. All of them admirable motives perhaps, but they all add massive layers of cost to the cost of producing that new homes, to the point where it's now over $500,000 to create a boring standard brick and tile house on a very small block of land. And that doesn't include the price of that very small block of land, which is now over 400,000. In Sydney, it's 710,000 median lot price. And that's ridiculous. I mean, how can people afford those prices? And how do we get here? Well, I lay the blame pretty much at the feet of government, but particularly state governments. And I was interested to see an interview on SBS with a religious minister who runs a free restaurant for homeless people in Sydney. And he was asked the question, how did we get to this point? And he said, in a word, housing. He said, housing, 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 housing. Not just this government, not just the previous government, but decades of bad government that got us to this point. And I thoroughly agree with those sentiments.
It's often, when it comes to government policy, it's often a reflection of unintended consequences, isn't it? So things like the NCC policies changing the way we build houses, with the rent controls and things like that, they're trying to protect the tenants. But there's often these unintended consequences that have led us to where we are today.
Yeah, I don't think there's a thinking through a policy and understanding what the consequences are. One example is recently in South Australia, the state government is likely to mandate that all new houses in South Australia have to have double lock-up garages of a certain size. Well, previously that wasn't the case. They want to get the cars off the streets and into garages. They've just added something like $20,000 to the cost of building a home in Adelaide. And over the life of the loan, it's going to cost someone with a mortgage about $100,000 more if they buy a new home and pay it off over 25 years. So those are the sort of consequences with well-intentioned, perhaps, policies that aren't thought through in terms of what it means for the bottom line.
We've talked a little bit about how we got here. Michael, I'm interested to see, what does your government bring to the table in terms of how do we fix this problem going forward?
Well, I think the first thing that any federal politician has to make very clear is that there are a whole lot of levers to the housing crisis that we don't control. And I think it's disingenuous for any federal government to say, we're going to fix the planning and zoning bottlenecks. We're going to, reduce the addiction that state governments have to taxing property. That in the end, sovereign state governments have to make those decisions. But there are some things we can do to assist and to get our own house in order. On the NCC, for example, I announced with Peter Dutton not long ago a 10-year freeze to the NCC. Because every time the NCC is tweaked, well-intentioned though many of the changes are, you just add layers and layers of cost. The last round of NCC changes, we estimate are about $35,000 on average per dwelling. Now, if you're a young first home buyer, that $35,000 could be the difference between you
in or out of market,
transacting and buying a home, or never making it happen. On driving supply, we also announced a $5 billion housing infrastructure program, just to fund infrastructure that unlocked new housing. So we're not talking about new sports ovals or swimming pools. We're talking about water, sewerage, roads, the things that state governments and local governments and water authorities used to fund that aren't funding now, that basically are pushed onto developers, who then push it onto end users. And that means we've got greenfield sites throughout this country that are sitting there that are unable to go ahead because it's not economic to do that. So we think that $5 billion fund can unlock, in a relatively short period of time, subject to the capacity of the industry, 500,000 new homes. Again, we're talking really, really rudimentary stuff, water and sewerage. A project in Toowoomba that helped inform the policy. A local government said to me, "Look, we've got a project, 2,000 homes, but we just can't afford the $3 million water pumping station." Now, to unlock 2,000 homes, $3 million is a really wise investment. So that was the genesis of that fund. So $5 billion, if we win, we'll get that cranking straight away, and we'll want to get the money out the door to drive that supply. We also think you've got to, you've got to reduce demand, and we are very unapologetic about drastically reducing migration. You can't have migration sitting at more than 500,000 people per year when you're building 160,000 homes, and that 500,000 doesn't include the natural population growth of people who are already here. So we've got to have a migration program that is calibrated to the number of houses that are being built. We also think you've got to reorientate the migration program. So I was getting criticised for making this point, but it's very self-evident. In the last financial year, almost as many yoga instructors came in as bricklayers. Now, I've got nothing against yoga instructors, but that just shows you how the migration program, at a time when we're bringing in record numbers of people, has been entirely mismanaged by this government. So a reduced migration, but also reorientate it to bring in the sorts of skills that we need to build that capacity. Because at the moment, our capacity in Australia is 180, 200,000 homes. We need to lift that to 220, 240, 250, just to start working through the backlog, the accumulated deficit. So that's a little bit of what we will do. We'll have a bit more to say between now and the election, supporting first home buyers as well, including giving them access to a portion of their super to buy a home. But there's a bit more to come, and for us, the most sort of important, I think, statement is we haven't waved the white flag on home ownership. We know a lot of young Australians in particular are really wondering whether that's something that is ever going to be possible for them. I think as a bedrock of our country has been that no matter who you are, whether you're, an office cleaner or whether you're a surgeon, if you work hard in this country, you can own your own home. I think it's the basis upon sort of our egalitarian society, and if we just cannot let it go.
The great Australian dream.
Kind of.
We're going to move on to Kelly. So from an industry perspective, what would you like to see in terms of policy changes?
Well, we'd actually like to see some policy changes stop. We think that this market in particular has just been under rapid fire from a change of policy. So 130 plus initiatives brought out in 2019, again, mostly orientated towards rental reforms to benefit the renter. The downside of that is it certainly doesn't benefit the property provider at that particular point. Into COVID, which was incredibly problematic for a lot of people on both sides of the equation, people not being able to afford their rents, people physically not being able to move. So that was a really tough period. Interest rate increases, incredibly tough now from a cost of living perspective to buffer that. Then we had land tax, and now we've got more reform. So the constant change in this market, and I know is being replicated for some reason in some other markets, is quite interesting. But we need to see the pace slow down, or if not, the ledger actually balanced. So we need to bring some incentives into the market, especially at a time where it is incredibly critical to maintain supply. We've got supply, we're just forcing it out, and that's a bad equation for so many. So getting back into the incentivising space would be great. Some reductions, some motivations for people to sell and move into something that's more in line with where their lifestyle is. There is no incentive right now for a retiree to sell because the stamp duty is going to be just too costly for them to transact. So they're going to continue sitting on 3 and 4 bedroom homes in really great locations that should be going to another family, but just aren't going to be anytime soon. So we need to use what we've currently got a lot better. We need to definitely increase supply. We need to change our thinking around, again, how we build more supply just in the rent market as well. Build to rents are becoming a thing, and we should work out ways to embrace that, but also make sure it's not just the top echelon that we're catering for, which seemingly we are at this particular point in time. And it would really be nice to see the narrative around property providers change. Unfortunately, this cohort treated as if they're really rich families and individuals. Second highest cohort of people owning properties and only have one are school teachers. So they're dealing with their own cost of living pressures for their own homes, their own mortgages. They're being squeezed out of the market just from their own affordability point of view. And if we don't get back in and thank them, appreciate the people that are providing this service that nobody else is, and make their lives a little bit easier as well, then we're just going to see everything that we're seeing at the moment compound. And that's a worry. We're not going to see the impact of these decisions today, but in 5, 6, 7 years' time, I think we're actually going to be able to look back at this and go, these are the decisions that were made at the time. This is why we are where we are, which is why we've got to reverse, because the pace of change in when you're trying to talk about rebuilding supply is a long one.
Terry, I've heard you talk about the carrot or the stick approach with many governments. I think that's a good example of Western Australia dangling the carrot and seeing how it's worked for them over the last couple of years. What other carrots could we dangle to get investors back in the market, providing more accommodation?
Yeah, well, I'd endorse everything that Kelly just said. Basically everything I wanted to say. We've got to stop. We've got to turn around the narrative, as you said, Kelly. We've got to stop demonising and vilifying the people who provide more than 90% of the product that's in short supply, which is homes for people to rent. That's been going on. It's been accumulating for 5 or 6 years now, mainly through state governments and bad media. We've kind of made investors the villains of the piece, the scapegoats. They've been misrepresented in media as greedy rich bastards ripping off the system. Typical investor owns 15 or 20 properties, we're told, when the reality, the official figures tell us that the typical investor owns just one. As someone on an average income, a family, mum and dad investors. There's a percentage that owns 2, but that's 90% that own just 1 or 2 properties. They're not wealthy people, and they can't really sustain their ownership in times when interest rates are high and all their other costs have gone, because it's not just interest rates, it's also insurances, it's council rates, everything has gone up. And it's very hard for people to maintain ownership of property. And at the same time, they're being blamed for the crisis. And at the same time, again, we have state governments constantly tinkering with the balance of the relationship between landlords and tenants, always in favour of tenants. The political announcement always says that we've considered the needs of both parties and come up with something balanced, but they don't. A recent example was South Australia again, who introduced new laws, regulations governing the relationship between landlords and tenants, and every item was in favour of tenants. There was nothing there for landlords at all. And that's sadly typical of what we're seeing from the states and territories in recent years. And increasingly, the surveys show that people who own investment properties feel they've lost control of this asset, that they own this big, expensive, risky thing they've taken on, and they don't have the level of control that they thought that they would. So more and more are getting out, and that's why we have a rental shortage. So we have to turn that around. We have to stop demonising them and actually start incentivising these people. And I know that for some that's not terribly palatable politically, but that's what we have to do. We've been told constantly that investors have this big advantage through negative gearing benefits, for example. In my view, investors are terribly disadvantaged in the system. They pay higher interest rates than everyone else. They pay taxes like land tax and capital gains tax that home buyers don't. They pay higher council rates, higher rates of insurance, higher everything. There's just this one benefit that maybe 45% of investors access, which is negative gearing, and it's not the big benefit that we're told it is. So that whole narrative has to change somehow, and we have to start incentivising people. Otherwise, we're not going to fix the rental shortage. It doesn't matter how many homes we build. If a big chunk of them aren't bought by investors and made available for long-term rental, we're not going to fix the situation where we still have 1% vacancies across Australia.
Well, I've talked a bit about unintended consequences. I'm going to bring this back to you, Kelly, because Victoria is the pure example of that, where policies are set in place to try to protect the tenants, but all of a sudden we see it backfiring by investors saying, I can't afford to maintain these properties, leaving it, and obviously makes it worse for the people they actually set out to achieve these great results for in the first place. So from a Victorian perspective, what are you seeing in the rental market? How is it affecting everybody here with so many more properties coming back on the market?
Yeah, so obviously what we're seeing is not only when the property transacts and sells, it's not being sold back to another investor. So it is going to someone else that's upsizing or right-sizing or first-home buyers, which is great, but they're not going to investors. What happens, the unintended consequence is when a rental provider makes the decision to sell their property, it's actually out of the market months in advance because the notification period to give a tenant, plus then they want to get someone in to style it, plus then the marketing campaign. So we only get the numbers at the pointy end, but the unintended consequence is actually we stop that supply sometimes 3-4 months in actual advance, and then it goes through to property settlement, etc. So that's certainly one unintended consequence. The other one is the rental provider does need to try and recoup some of that money. And, clearly there's some regulations in place that don't allow them to put the rent up to the limit that actually helps continue servicing that property. So when they do increase it, it's heavily scrutinised. More things will come in place around where the government will now actually be able to stop and challenge rent increases going forward. So again, losing control of what you're allowed to charge is going to be an unintended consequence. Well-intentioned, and that is great. We've also got minimum energy efficiency standards which are being flagged to come into effect at the back end of this year. So there's another cost coming for people to upgrade from gas to electric and all these types of things. I just don't know where it ends. And I think that's the worry. And when a rental provider is okay to hang on to it for as long as they possibly can, we've hit that tipping point where now they can't sustain it. So they sell, there's less supply, there's less opportunity. And unfortunately, when you're getting 50 people line up for one property, I'm not sure what happens to the other 49. The other unintended consequence of all this is sometimes the most vulnerable are the ones at higher risk. So you think about when you've got 50 people applying for a property manager's job is to put the best fit for that rental provider into that, which is, definitely someone that's got double income, potentially no kids, they've got the ability to service that. Think about the single mother who might not have the certainty that some of those people that they're competing against actually has. Someone that's fleeing domestic violence, the opportunities there are less now because the supply is less. And the property managers are really under a huge amount of pressure because everywhere they turn, they're getting pressure from the renter, they're getting pressure from the rental provider. And that's just actually creating its own downward stream of challenges within our own industry around how we retain talent to manage all of this change, and how we help educate and coach our people to be able to deal with this pressure that they're feeling.
Well, there's obviously some long-term plans that we can put in place from a housing perspective, but the short-term answer really does seem like we need to, incentivise property investors, landlords, to get back into the market. So what can we do to start to incentivise? Have you got any ideas from a federal level to get property investors back in the market?
Well, I mean, we obviously fought very hard in 2 elections in a row to protect the tax arrangements for investors. That was pretty hard fought and at times not popular, but in the end, the Australian people backed us because, to echo those thoughts, the simplest way it's been put to me is if you want less of something, tax it more or regulate it more. If you want less rental stock, regulate it more. And you want less rental stock, tax it more. So, look, from our perspective, we're determined to maintain the very limited tax benefits associated with investing in property. Very good point that nearly 90% of people own one property. It's a wealth creation vehicle, but in addition,
you're providing housing.
And if we accept that a third of people who are renting now, it's unlikely to go down, someone needs to own that third of stock. And who will they be? Well, we want them to be Australians. There are contrary views, particularly around tax concessions for build to rent, where the Labor Party would like large foreign institutions to own tens of thousands of properties. I think that would be a sad day for Australia. I think Australian homes owned by Australians and Australian investors is definitely preferable. So I suppose in answer to your question, we'll defend those limited tax benefits, and that's still a fight that's not gone away because I think we all know that Labor, if they were given an opportunity and thought they could get away with it, would love to run with it.
Yes, well, we look forward to hopefully seeing some of these incentives coming our way. Kelly, what about for yourself?
Yeah, again, it comes back to incentives. So ideally, anything that can release the cost burden. The quickest one right now is the land tax. You know, to slap everybody with a land tax increase and then blatantly call it a COVID recovery debt is not in anyone's best interest, I don't think. So we'd actually love to see the government driving more investment into the state to offset the need to tax everybody that actually lives and works here more. So if it's not tax incentives, then it's slowing down the reforms that are coming into play. But I think both should be done, especially now, considering the point that we're at. There shouldn't be one or the other. The government needs to unleash a couple of different thought patterns in terms of how we arrest this. And we're also advocates for incentives based on people retaining their properties in the rental market for a longer term as well. So doesn't need to mean a diminishing return right now, but what's the incentive to make sure they hang on to their property for the next few years as well to help us through this period that we're in.
Well said. And finally, Terry, they're giving us the wind up very shortly, but your final words on the topic?
Yeah, just on the topic of affordability, what I'd like to see happen, well, I'd like to see governments stop treating the housing industry as a cash cow. I think that's the big thing. The reality is that if you build a new house on land in one of our major cities, somewhere between, depending on the location, somewhere between 35% and 50% of the cost is taxes, fees and charges at the three levels of government. Means that, you know, the typical house and land package in Sydney these days is over $1 million, maybe 1.2 million. If you remove that taxation element miraculously overnight at 600,000, that suddenly becomes very affordable to people. Of course, that revenue has to be replaced with something, but certainly we could start by dealing with stamp duty and land tax. And as far as investors go, I asked the question: why is it considered the norm for investors to have to pay more stamp duty than a home buyer? Why do they pay higher rates of interest, for example? I can't see any logical reason why an investor borrower should have to pay a higher interest rate than a home buyer. Those things need to change. Remove some of those disincentives to becoming a provider of this thing that's in chronically short supply.
Yeah. Very good. Well, thank you so much for your time today. Really appreciate all of your insights. It's been a really good discussion. That's the play for today. This program has been brought to you by hotspotting.com.au. This is Ticker. We'll be right back.
You're watching Ticker. We'll have more in just a few minutes.